Good morning, everyone. Let's get right into the stock market charts. I wanted to get a video out yesterday, but I was dealing with some personal issues with my dog again, so just couldn't do it. So today we're going to go through the stock charts, going to cover what we're looking at. Again, the last couple days, the last couple of videos, what I've been calling for lower prices, and that's really been my thumbnails. I've been talking about lower prices. Oftentimes in the thumbnail, I'll put something that maybe indicates where I think the market's heading. I don't, often put things where I think the market, I don't try to after the fact, I don't try to do after the fact analysis. I try to give you an idea of where I think it's going, what levels to watch. No guarantees, of course, but that's really what I'm trying to point out is where the opportunity I think in the future is going to be so that you can take advantage of it if you're open to it. So we're going to start out here with the SPY. SPY here breaking pretty much that support level right there. We had some support at 435.86. So far, the day's not over, but we're below there. We're actually down near the lows that we were recently on, and it looks like we're just continuing to the downside as far as I can tell. So levels to watch, I think there's a level 425.51 is probably a key level that where the market's likely going to bounce off of. We might bounce at this uptrend line right here that's marked in red. That, if you look at the weekly chart, and again, you need to use log scaling to see this, especially longer time frames, you always need to use log scaling to actually chart it. Here's your 2009 lows, and as I roll up, I show all the areas that we had as support for the bull market. We broke that bull market in 2018, the trend at least, and we tested it here right before COVID crash, and then we dumped down, and they've recently popped it above there. We've been kind of grinding above that trend line. So there it is right down there. So if I go back to the daily, that's that red trend line right there. So we might get a reaction there, but I do think we're likely heading at least down to that level before getting a reaction. The other thing that makes me think that it's possible we could break is the fact that we recently were just right down there back here on September 20th, and they bounced it up. So now if we get back down there, I think it's a higher probability that we're going to actually break. So that is that level to watch. Triple Qs. Big impulsive down day today. Again, I talked about this. I talked about how I was getting short, how this looked like a shorting opportunity. And, the user comments typically, you have to realize shorting the markets, you're in the minority. It's just the nature of, it's just the nature of it. So you're always going to have people saying you're wrong. And yeah, sometimes you are wrong. But I got that one right, at least today. And this drop today has wiped out, pretty much all the gains from about halfway through July. So we're looking at about 2.5 months of gains wiped out in, just a period of a week or so from that sell signal, week and a half. That's how it works. That's how the downside works. But oftentimes, nobody wants to short when markets are, at all-time highs. They want to short, when markets crash. And that's the nature of, especially retail trade. They like to buy high and they panic sell and sell low. And, again, the negative divergences that have been building in the triple Qs and the SPY and really across the board have indicated that we're going to get a sizable drop. And I don't think this drop is just ending today. I think there's more to go. So the levels I'm watching right now is, we've got a level right here at about 354.86, and we've got another level here at 342.70 area. That's kind of your former resistance. So I think that's a high probable target right there, that 342. We're probably going to get a bounce at one of these levels, some sort of a sizable bounce. I do suspect it's that 342 level. And maybe when it's all said and done, we're down here at this red trend line. That trend line, if you go to the weekly chart on the triple Qs, that's your bull market upward channel. So there's 2009. I kind of get the top and the bottom marked out, upward price channel. The Fed recovered it here and the Fed recovered it here. Both times you broke, the Fed stepped in. All right. So, but the Fed's not going to step in way up here, most likely. All right. Maybe the Fed will step in down here if we're going to break. But we could be heading all the way down to the top of that. We haven't hit that for quite some time. So I think if we were to go down there, we'd probably get a relatively tradable bounce down at that level. So things to watch. And right now that's sitting at about 324-ish, right in that area. And again, it would depend on when we got there, but that's a key level to watch. Small caps, nothing really, just sideways. I'm back on the weekly chart, but you can see just sideways action. Nothing really going on. Could be a topping pattern, could be consolidation. We don't know, but the markets look like they want to correct some more. So I suspect we're in a topping pattern on IWM, given the negative divergences that have been building. If this was consolidation, you'd see the momentum probably, consolidation, usually you want to see bullish divergence. That would show that there is momentum is turning to the upside. We don't see that. What we see is negative divergence. We see momentum kind of turning down while price kind of is just elevated and hovering. But if we do get a broad-based correction in the markets, likely this is going to get dragged down pretty impulsively with it. Okay, I want to talk about some short opportunities that are actually showing up right now. Tesla. So let's go back to the daily here. Tesla has been rallying, kind of grinding higher, really on nothing, just no news, just this float higher. And you can see the trend line I've been watching is this lower trend line right here, watching for that to break. Obviously, we're above that now, but we've rallied into that key resistance level, which is right there at about 780.24. You can see back in the past that when at the all-time highs, that was kind of your support shelf right up in here. Once we broke that and see that big impulsive breakdown candle right there, we broke, and that's been resistance ever since. So there it is, resistance. Now, as I zoom into where we are right now, or really over the last couple of days, they popped it yesterday. And again, I saw that pop yesterday, but it was on nothing. They popped it, and they're selling it down today. So looks like a bull trap, and we're already below it. So I suspect we're breaking down here, and this is an objective area to short this thing, in my opinion. And I would probably be looking for a pretty sizable breakdown. Okay, so we'll watch that daily close, but obviously if this thing just wants to dump into the close even more and it looks like it's starting to go, I suspect we're heading a lot lower. My final target on this is actually all the way down here at 460. That's a key level of support. So I'm looking for a drop in Tesla of about 40% or so. Yeah, I like it. And there's that level of support. You can see back here that we tagged it once, two, and then three times, and then we broke above it pretty much straight up. So I think we're going to come down and test that again. So that's the final target on that one, at least for right now. Okay, here's net. This is really just a follow-up trade. It's not objective to short anymore, but I talked about it back here on the 24th, how I basically I shorted this thing on the break right here on the 20th, and they popped it up and did this little fake out move. I exited the short, and then when it broke back down, I re-entered the short. Sometimes that's how it goes when you're trying to get that really good positioning. But I remained short, and from that second short, that break, it's down about 13 to 15% in just a matter of 2 or 3 days. So looking good. Support level really doesn't hit till about 95.12, although we'll probably get some sort of a bounce here at this moving average, this 100-day moving average. Probably get some sort of a bounce. But yeah, that 94.56 I think looks good, and we'll watch for, we'll see how the rest of the markets are trading out. Follow up on Starbucks. Right now we're holding the moving average, the 200-day, I guess. So we'll see, but I think we're likely going to break, and we've got a support level here at 109.50. Once that goes, I don't see any real support till we get down to about 101.24. And if, we break that, I think we're heading all the way down here to 93, 91-ish, somewhere right in there. So that's going to be a drop from where we're at of about 20%, 18 to 20%. That is quite a ways down there. So obviously the further down you get, the lower the probability. And that's why I like to take profit on the way down. CAR, a couple things to watch here. So we rallied straight up into that resistance line. See the red trend line? This comes off your March 2020 lows. So you can see we held support here, held support right through here, held support there. Then we broke. And once we broke, we hit resistance. And we're right there again. So objective area to short doesn't mean it's going to work out, but definitely an objective area to take a short position. We have negative divergence, not confirmed completely yet. So we got to, you'd like to see that confirmed, but you'll see how the momentum is making a new higher high in price, but yet momentum is a lower high than that former high. So we'll see if this actually does reject, but that is an objective area to short. And, I'd probably look at the first target as probably the top of this. This is where the buyers will likely want to step in, about 99.78. That would be just on this first target, a drop of about 17.5%. So this thing can move, you know, it's pretty volatile, so I'd probably scale down the position size on this one, not take maybe as large of a position as you would on something like Starbucks. You don't need as much in order to make a good amount of profit. GNRC. All right, this is your daily uptrend line coming off the March 2020 lows. You can see we held support here, held support there, held support there. We broke support, they recovered it, did a little fake out move back below. So this is the same chart pattern as net. We are back below, we're below that 50-day. We'll see where the daily chart closes. That 50 is sitting there at about 428.36. But I'd look for a move down to 385.50. 385.54 again, and then we'll probably bounce there, probably get a bounce, and then we got some other levels down here, 339.72, and all the way down here, 287.85. So those are some levels to watch. It looks like we're going to start to roll over on that one. Again, this one has negative divergence that's been building for a while, so that's kind of key in my analysis, is looking for those negative divergences and then looking for the trends to start to break. So there's the negative divergence, there's your break of trend. Looks like we're heading lower. Blackrock. All right, Blackrock kind of selling off today. Looked like we had just a little counter trend bounce. Again, I believe we've started a downtrend in this. Obviously, if you want to wait till you're all the way making new lows, then it'll be obvious. But I think a lot of the money gets made at that point. Okay, so I think BlackRock's going to hit that support, and we're probably going to break it the next time we hit it. And that, again, 840, you know, it's about 840.50 or so. Once we break, I believe it's going to be a swift move down to 790.54. Yeah, so that's the next level we're watching. That is a drop of about another 7-8% to the downside. I like it. All right, the miners, we'll look at GDX. Miners are kind of hanging in there. Again, we have this bullish falling wedge. I've kind of got it marked out here with the top in green, the bottom in blue. We're just down there at the bottom of that right there. So we'll see how we close. But again, it's pretty close to that area of support. We're not impulsively breaking that level. You know, the miners, when I look across the board today, they're kind of mixed. Some are up, some are down, but not just inherent weakness across the board in the miners. So we'll see how that pans out. We're still holding that bullish divergence in the PPO and the RSI. There it is in the PPO. So again, we're making new lower lows in price, but momentum is still hanging in there. And there's the RSI, just barely hanging on to that. So we'll see how that pans out. Let's see if there's a bid on these miners into the close or maybe tomorrow. That's what I suspect happens. Looks like there's going to be a bid, but we'll see. But there is bullish divergence remaining. So we've got another divergent low. We're basically right at support. It is an opportunity to potentially add to the mining stocks. Again, that's aggressive. If you want to wait to be conservative, you'd want to wait for a break of the bullish falling wedge, which we still have some work to do there. And KHC, this is a long trade idea. I know right now I'm more interested in shorts, but this one's a long one. Still holding that support right there at 36.08. You know, really going nowhere, just consolidating on support. So we'll see how that pans out. Again, we have bullish divergence that's been building for a little while. And we are just right there above support, looking for some sort of a catalyst to break us higher. So as far as I can tell, that's going to show up. I don't know when, but looks good to me. And again, the target for this is all the way up here at the gap fill, 47, you know, about $48. There's your gap fill from back here. Big gap down on the daily chart. And I'm thinking we're going to run up and fill that gap. So I still like it to the upside. That's all I got, guys. Leave me a thumbs up on your way out. And check out the Stock Market Technical Analysis course. Again, it's all about trying to find the trade ideas for the future, not for what's happening right now. So that's how that course is going to lay out all those ideas for you and give you guys some additional skills. That is link is in the description below, guys. Catch you on the next one.